around 1% gone in the Hong Kong market.
Certainly, we are seeing cases very much on the rise, and there is certainly this fear factor around that at the moment.
The management briefed analysts and said that they are looking at ways to recoup their market share.
The stocks in the green, we're up close to around 20 points.
India is standing out in the global situation, both from a capital flows as well as FDI flows perspective.
We would like to publish the results, the consolidated, which is the requirement of SEBI, and that will be done pretty soon.
The headline index levels have made a new high, but the markets have been very, very narrow.
One of the biggest advantages that JFS will come with is truckloads of capital. If you were to really take the 6% stake that they hold in Reliance Industries Limited, that at current market value is closer to about 1 trillion rupees or a lakh crore.
They're trying to buy Paytm right now with a target of almost 1,055 odd rupees.
PVR has opened 12 screens at the Lulu Mall in Trivandrum, and with this, the PVR presence in Trivandrum has grown to 14 screens in 2 properties.
It's a 5th generation hybrid. That's the latest that Toyota has. And I think you're going to see spectacular performance in terms of fuel efficiency, emissions, and safety.
Market's absolutely flat.
All right, that was the day so far. You're with us here on what is an absolutely flat day in the market. Guys, hi, good afternoon. And Nigel is here. Mangalam is with us from the newsroom floor, and we've positioned him in the newsroom so we can get Mangalam's full vocal abilities on full display.
I think you do that on purpose, Prashant. You know, when the markets are absolutely flat, at the start of the show you say that you'll have to sing, so that way people are tuned to the end of the show, hoping that I will sing, and turns out maybe I don't sing.
You're the attraction, Mangalam. And hope floats, as they say, right? So
yeah, hope. I would hope that I'm the attraction. That's the hope that floats right now.
But you're singing today, right?
Well, we don't know. We'll wait and watch.
That's the whole point, right? It's anticipation.
No, it's happening today.
So in terms of markets, nothing is happening. That much we can say, because it's absolutely flat as they come. And it's been that way for bulk of the session now. So flat, I think we got to about 18,535 or so, which was the high point. And then the markets kind of cooled off once again. So 18,495, just under it. Small caps are doing well. There is real estate, perhaps autos, etc. So there is bits and pieces of action here and there. Market breadth is positive as a result of that. 2:1 advances to declines in favor of advances. I guess the wait for the new all-time high, which is about 100 points out, 110 points out, that continues. Maybe that wait will sort of we'll have to get to the next week, perhaps, to see those kind of levels. Unless, of course, we see another one of those power-packed days like we had yesterday. Yesterday, the move started at 3 p.m. and, oh boy, it was a big one. So we'll see. Unlikely that we'll see a repeat, but who knows. 18,494 for now. Absolutely flat on the Nifty. Nigel.
Well, it's a quiet day, Prashant, but it'll be interesting to see, how things shape up, because there's a fair bit of action at around that 18,500 odd mark, and which way of 18,500 will it swing? That's the big question. The 18,500 call, the 18,500 put, both of them very, very active. The premium on each of those strikes are around 100 rupees odd. So, you just punch in those numbers. If someone is, doing the short straddle, they're eating the premium of the 18,500 put and 18,500 call. They're pocketing close to around 200 rupees. So the range is 200 rupees lower than 18,500, 200 rupees higher than 18,500. So 18,300 to around 18,700. That appears to be a broad range. Today is a day of consolidation, but what a run we have had. One would have thought we could have easily pulled back 50, 100 points odd. That's not happened. So par for the course, I'm thinking. Mangalam?
Par for the course, Nigel, for the frontline indices. But where I'm looking at, there's a big party going on, and that's the mid-cap end of things. You have nearly 2,000 stocks in the green for just about 950 in the red. So those advanced decline, red crisscross lines far away from each other as we go into the weekend. And this would be extremely heartening, primarily given the weakness that we saw, or rather the underperformance that we saw of the mid-cap index in the previous series, the November series, that is. And in December, usually when institutions buy less, or institutional activity is muted, a lot of people play the markets through the mid-caps itself. And that's what's taking place today as well. Case in point, look at the stocks that are buzzing around. We have Indiabulls Housing Finance up 11.5% odd, L&T Fin Holdings up almost 6% odd. In the auto space, Prashant spoke about, Tata Motors is doing well, but just take a look at Tata Motors DVR up 9%. Most of the gains coming by in just the last half an hour or so. So we do have a bunch of stocks which are doing well. And Prashant did speak about, could there be that last hour flourish? I can tell you one thing. If there is a last hour flourish and we go to a record high on the Nifty today, then I will sing for you guys.
Sing? We'll want you to dance as well. Let's see.
Dance, then we can't dance alone. No? You'll have to join.
That'll come at 19,000. So I'm asking for too much. Don't, but anyway, so that's a promise. We'll hold you to that, Mangalam.
Yeah, for that the market, promise, conditional promise.
All right. So yeah, absolutely. And so let's quickly tell you what's lined up here on the show today over the next 60 minutes. We learned from sources that the Kirit Parikh panel, which is reviewing gas pricing mechanism, is likely to submit its report to the government soon. More details on the story coming up in a bit. As Nifty Bank trades at a record level, a complete analysis on its performance over the last few months, that's also coming up. And we'll talk all things market with Abhiram Elaswarupu of BNP Paribas India a little later on the show.
All right, so let's also get in some closing strategies coming in. How should you position yourself for the next 1 hour of trade? We do have Mitesh Thakkar with us. Mitesh, it's been an absolutely flat day on the index. I mean, what are the stocks that you're looking at individually? Do you have a trade on the index, if at all?
So my sense that, my belief is that I think the market is still positively biased with yesterday's big rally. I think this is just a day of consolidation. I would still maintain that, people who don't have long positions on the index, I think intraday pullbacks to about 18,420, 425 zone would be a buying area. And you can take a 50, 60 point stop loss from there. Having said that, on the stock side, of course, the bias is on the positive side. So I have two buy calls. L&T Finance, it seems, is having some kind of a price breakout and a very good action over here. That's a buy. Keep a stop just below levels of around 85 and a target of around 94 can be looked at on the upside. And the other one which I like is MCX. It's trying to break out of consolidation. The breakout happens when the stock starts getting past levels of 1565 on the upside, and therefore it's a conditional buy. Buy above 1565 on the spot and take a 20-point stop loss of 1545, and 1610 is the near-term target.
All right, thanks for that, Mitesh. Well, let's welcome Prakash Diwan, on the show. Hi, Prakash. Good afternoon. I'll tell you what, Prakash, if you ask the retail investor out there, they would have preferred today's session in comparison to the last four. Because today the mid-cap index is doing well. Today the breadth of the market is well. And in fact, some of these mid-cap and small-cap names, they're doing very, very well. So a lot of portfolios will feel much better getting into this weekend. That said, a couple of these stocks are doing very well. I'm not sure, Prakash, if you track the smart meter space. Genius Power is one stock that's moving higher, and HPL Power as well, that's the other one that's moving higher. And for this week itself, we're seeing quite a bit of traction on these stocks. Have you been following that theme, smart meters?
Good afternoon, Nigel. So, while the theme is pretty well discovered and all of us understand that it holds a lot of promise, given the fact that our infrastructure lags behind in terms of, I shouldn't be using this word, but in the right sense, policing of usage of electricity in some of the parts where it's notoriously, the leakages are so high, the transmission losses. But the unfortunate part with this entire business is the reason why some of these companies, while they're doing great work, don't get valuations which are very encouraging, is because of the regulatory overhang. I mean, it all depends so much on how the regulations pan out. And that's one of the reasons why even companies which build capacities, which started pouring into it in an active way, didn't do it. So, a simpler way to play this theme without being subjected to the risk of regulatory changes or delays in regulatory changes on the metering side is actually to go into the downstream products, which is things like magnets, things like diodes, things like, so there's lots that goes into that. And to be honest, HBL Power System has much more than just that. I mean, they have so many other things going for themselves. But I think it's a great franchise in terms of what they're doing for the defense, for the railways. So, it's definitely, I think there's no comparison between Genius and this. This is way ahead. It's quite superior to a lot of the other businesses. And they've got proven expertise on a lot of these very innovative products, engineering products, which is going to take much more time for others to catch up with, whether it's in the defense side, whether it's in the safety aspects of the railways, locomotion. So, there's much more to it. I think we should look at that for sure, rather than just that sliver of metering business that you mentioned.
Batteries, electronics, e-mobility, defense, spun concrete, battery energy storage systems. I mean, it's I'm of course reading from the website, but yeah, I mean, it's a pretty diversified entity. So yeah, absolutely. Although it's come up to these 110, 115 kind of levels a few times since the last quarter, and it's turned around. So let's see if this time it's able to take these out. Prakash, hi, afternoon. We're seeing a little bit of rebound in names like PB Fintech, etc. Is this the bottoming out process finally, or you think too early?
Good afternoon, Prashant. So, I think it's going to be extremely difficult to figure out, or identify the right bottom for some of these newly listed businesses. But out of those, if you really ask me, and I mentioned this earlier, there are two businesses that to me seem very logical, and there's not much of competition per se in terms of what they can deliver, what they are delivering. So one is PB Fintech, given the fact that their presence in the policy via the Policy Bazaar portal is so strong, and the way things are changing in terms of the insurance pricing structure, the entire value chain which they've tried disrupting is actually moving in favor of that disruption. So somewhere I think they will start restoring some sort of a profitable growth, and that's what's missing right now. So if that missing piece is added to the story, then there's a very different relook at it that people will be willing to make. Of course, it's a different matter that the pricing at which it was offered in the IPO and all was too exorbitant, too exuberant, and you're paying the price for it. The second business, similarly, which has its place under the sun, and at some point will start offering value, is delivery itself. The reason is what they are trying to do, and they have proven themselves to be doing it successfully for so many businesses and partnering them on the fulfillment side, the end-to-end solutions that they can provide. I think it's a marvelous example of how critical logistics is. I'm a big, proponent of the fact that India as a force cannot grow internally or externally on the export side without logistics being mature enough or robust enough or deep enough as an ecosystem. And that's exactly what they play on. My sense is you can take your pick in terms of how pricey you want to pay for it in terms of valuation, but at some point it will start offering a great proposition to have in your portfolio as an exposure. So yeah, I mean, difficult to pinpoint, but I think it's closer to that zone than ever before in the last. I mean, we've seen it erode so much of value, and now it's giving you that kind of a window. But you could probably wait for some more time before that call is.
All right, we take that point, Prakash. That's about the new age stocks. But let's move back to the old world and a bunch of stocks that you thoroughly enjoy analyzing. This is the Auto Pack, which is doing well today. We have Hero MotoCorp, which is moved to the high point of trade. Tata Motors, after a full year of underperformance, is actually finding some favor. And what's running faster is Tata Motor DVR, which is about 8.5% higher. Still trading at a rough 45-50% discount to the full price share. Wanted to know your thoughts on the auto space, and do you now like Tata Motors after the weakness that we've seen in the stock, or the underperformance that we've seen?
Good afternoon, Mangalam. So yes, I think it's a very interesting kaleidoscopic kind of environment of sorts that's happening, whether it's in terms of market share, whether it is in terms of product expansion. Every now and then you see somebody or the other trying to outdo the others in one of these aspects, whether it's the distribution mechanism or the way they are selling. Tata Motors, for instance, has grown and has been rewarded as a stock for all the changes that they made in the last 2 years on the PV side. Mind you, they also have a fairly decent EV exposure, which we are kind of ignoring, and we all the time keep on ending up to reward the larger player, and that's Ashok Leyland. But the CV portfolio also at some point in time will get re-rated for Tata Motors. I don't know whether it happens in this quarter, it kind of starts next quarter, but somewhere the numbers will start speaking for themselves. And the other thing is the electric vehicle portfolio, especially after the recent launch on the more affordable price points, is yet to kind of start reflecting in its growth. So somewhere that will also start having, and it's corrected itself in terms of giving you that opportunity where things have caught up, the business improvement has caught up, and it probably is not as expensive. But DVR reflects that. DVR typically reflects that, and Nigel and I spoke about this a couple of weeks back, where the discount was narrowing and it will continue to narrow, and that's what's happening. So there you have the DVR probably outperforming in the short term, but as a long-term bet, yes, Tata Motors will also start offering tremendous value given the changes in the environment that it's making.
Take that point. Meanwhile, just keep an eye out on the bottom of your screen where we understand that the Adani Group, which had spoken about fundraising plans, now there is some details to that. In fact, they will raise 20,000 crore rupees via a fresh issue of equity. So it's an FPO which is coming in on Adani, and the stock obviously has digested this news, as a result of which we are seeing a wee bit of a decline on that counter. But let's move on and talk about some source-based news that we are getting. Sources tell CNBC-TV18 that the Kirit Parikh committee, which is reviewing the gas pricing mechanism, is likely to submit its report to the government by the end of the month. Parikshit joins in with the details of the same. Parikshit.
Well, yes, there was speculation that this report will come out this week, but we have got to know from highly placed sources that this exercise could take a few more days, and possibly by the end of November, this report will be submitted to the government. Again, there has been speculation that the panel is going to recommend a revised price for natural gas. That's unlikely to happen. Sources say a formula would be arrived at and it could be a differential formula for the consumers of piped natural gas and a different formula for the industry as well. So what we've got to know from our sources that they will try and balance the needs of the industry with that of the consumers. There are certain social needs of consumers of the agriculture sector that the committee will have to address, and probably there could be a price formula to address that audience as well. So let's wait and see what happens, but in all likelihood, this report will be submitted to the government by the end of this month.
All right, Parikshit, thanks very much for that. By the way, there is news at the bottom of the screen. Tata Motors is, this is regards to Tata Motors, Jaguar Land Rover is going to cut production in the UK till March. That is coming in from The Guardian, the newspaper. So that's just the only line that we have so far. And we'll try and get some background to this in terms of why this is the case. JLR cutting production as it continues to face chip shortage issues. So yeah, supply chain issues still hurting, and that very much the case for most car companies still around the world. So that is JLR with regards to the production cut in the UK on the back of supply issues, chip shortages. Okay, let's tie in and the gas stocks as well. Parikshit, of course, told us the gas pricing formula and the report submission soon. Sonal is here to get us details on how markets are perceiving the impact to be on individual stocks. Sonal, over to you.
Thanks a lot for that. Well, yes, it is going to be a very important outcome of this Kirit Parikh committee, which is expected to come out with recommendations by the end of November. Now, remember, they were supposed to be doing it back in October itself or maybe mid-September, but this has been delayed because they were unable to come back to a specified formula to calculate gas prices. In the month, for the month of October to March, gas prices, they are set at $8.57 per MMBTU. The expectation was that there'll be a 100% increase. So that would have meant that gas prices would have come in at around $12 per MMBTU. So it has come in much lower than what was anticipated. So there is an expectation that yes, maybe there could be a price cap which will come in place after the recommendations come out. Now, it is important for stocks like IGL, MGL and Gujarat Gas, specifically for IGL and MGL, because they get majority of their gas sourced locally, that is the APM gas. Not so much for Gujarat Gas because majority of it is imported. They have only 40% exposure to domestic and CNG volumes as well. We are waiting for the outcome of this particular report. So important to see whether they will be able to cut down prices further, because it will have an impact on how much of a price is passed on to the consumers, because these companies have been dealing with big issues as far as margins are concerned. So an important update, we'll have to see whether prices are capped at a certain level or not.
Okay, all right. Thanks for that, Sonal. And you've been on top of that, so we'll wait for the outcome. Prakash, Your take on these stocks, how do you approach them? Obviously, we're waiting for the outcome, but you know, how are you tracking them?
You know, so what we anticipate is that the price hike is going to be a very fair and rational way to kind of compensate for genuine increases that some of these companies would be facing. And, you know, as a reality, we would all have to live with this fact that natural gas prices and hence the derivatives will always start costing much more. And the things are going to get costlier given the dependence on this as such a hugely, massively used fuel. So my sense is, you know, companies which are into the distribution side, or even today's reaction from Gas Authority tells you very clearly that it's only going to be beneficial. You know, so this was supposed to happen sometime earlier. It's probably got delayed by a month. And as and when it happens, it probably take the overhang from this uncertainty of sorts from the pricing side for most companies. Definitely be keenly, you know, benefited. My sense is you'll probably see a little bit of a higher delta in the case of the city gas distributors like IGL and NGL. But I particularly like GSPL for its model, which is fairly narrow but very focused and sharp. So that's where, you know, the reaction could probably be much faster and much sharper. But otherwise, I think in terms of benefits, yes, it's going to be all around, and particularly for the city gas distribution, the larger ones, the metro-focused ones like IGL and MG.
All right, we take that point, Prakash. Thanks a lot for that. But just hang in there. We'll take a short break and come back as we do that. Before we do that, actually, just keep an eye out on the Nifty Bank. It's still meandering around the lower end of today's trading range. We have it down by almost 100 points, even as the Nifty is just about that 18,500 points mark. Let's take a short break. As we do that, here's a quick programming note. In fact, in a few hours from now, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative called Future Female Forward, the Women's Collective, presented by HSBC. Catch the on-ground event in presence of our managing editor Shireen Bhan, Hitendra Dave of HSBC and other women leaders of India Inc. live this evening at 5:30 p.m. onwards. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces. So don't forget to tune in to CNBC TV18 at 5:30 p.m. today. Well, a bit of an uptake is what we're seeing on the markets. TechM, you know, it seems IT has got its mojo back. So just pull up the IT index. You have TechM that's moved to the high point of the day. You have Wipro as well as TCS. Now, all three of them have moved up, and that's where we're sitting with the marginal gain. But all of those gains are because of the tech stocks, and they have moved in the last few minutes or so. Keep in mind, Eicher Motors as well has kick-started the motorbike. That moves to the high point of the day. So pretty good going out there. But the sector that's been the big leader has been the Nifty Bank. It's trading at record levels. The banking pack has consistently outperformed the broader markets over the past few months. Ekta is with us with some analysis on the banking space. Ekta.
Thanks for that. Well, yes, definitely the Nifty Bank is at a record high, and it's been strong moves for a couple of the constituents on a year-to-date basis as well. For example, ICICI Bank is up 27% on a year-to-date basis. IndusInd Bank has rallied over 30-odd%. Bank of Baroda has been one of the stark outperformers, up around 100-odd% on a year-to-date basis. And remember, a lot of these banks are either very close to their fresh 52-week highs, are already at those levels. Now, in terms of the valuations as well, on a price-to-book value, all of these banks have in fact seen quite an expansion when it comes to their price-to-book value on a one-year forward basis. But remember that the private banks seem to always be exceeding the public sector banks. So, for example, HDFC Bank, ICICI Bank, a lot of these, Kotak included, are the ones which are really ruling the roost when it comes to the price-to-book values. Now, a couple of triggers for the banking space: benign credit cost cycle at this point in time, loan growth which is over 15% year-on-year, gross NPA which is improved from a sub 5% level versus double digits gross NPAs in probably 2017-18 cycles. Net interest margins have seen an improvement on a Q-on-Q basis, and overall, in terms of what to watch for, sustainability of loan growth, net interest margins, as well as the deposit costs rising. Consumption slowing is probably one of the key factors to watch out for when it comes to a possible risk and these banks. PSU banks, the market cap has in fact crossed to a record 10 lakh crore for the first time ever. Margins have expanded, and if you look at the valuations, most of the price to book values are not even at around 1 times. So there is some amount of upside possibly if in case the fundamentals do continue to improve. Also remember that the government has raised the maximum tenure of PSU banks, MDs and CEOs from 5 years to 10 years, and what that brings to the table is that the ability to execute their plans, not just plan them. So as you can see, I'll just leave you with the price to book value for a couple of these PSU bank stocks. Most of them are at fresh 52-week highs and have seen an expansion of their price to book value this year.
All right, if we take that point, Ekta, thanks a lot for that. There's this weird obsession that we have with singing right now, so just wondering whether you would like to join in with a small line of any song. All right, Ekta's gone actually, so she's taking the quick exit, stage right. Prakash, forget song. Those who would have invested in PSU banks would be dancing right now. What are your thoughts in the banking space? And do you think there is still, room for these PSU banks to go higher despite, them being worried about the cyclicalities that one has, etc.? Is there more room?
So I don't know about whether you should worry, but very clearly, Mangalam, it should not become a swan song and swan song for most of these guys who have picked up the banks at the right time. Primarily because some of these smaller banks have really raised up without a change or shift in fundamentals as yet. Okay, it is a pure anticipatory kind of a trade. So it's a Bank of Maharashtra or for that matter, a small UCO bank, and all of these. I mean, I was seeing that the kind of upside. We talk about the bigger ones usually, but be careful with the smaller ones. If you've made your money, don't outlive your welcome. It's time to book profits and move into something which is much more stable. Because the rising tide is of course going to raise all boats, but then that doesn't mean that you continue to stay afloat and then kind of get worried. The key critical element is going to be for most of the larger banks, their balance sheet expansion is the only way they can improve ROAs. We've seen that in Canara Bank, you've seen that in SBI. The smaller banks cannot do that so easily. So I think it's time for people to do that, at least go through your portfolio, see if you have smaller banks which have done well, book out of that and probably look at some of the more robust, large public sector banks if you still have to get exposure to that. And last time also I had mentioned a few months back, the PSU bank ETFs are the best way to play this, and they probably still will offer some value because they're much more choosier, selective on what they pick up.
All right, Prakash, thanks very much. Good speaking with you. Appreciate you joining in with that perspective. As always, have a good weekend. See you back next week. Abhiram Eleswarupu is head of India Equity at BNP Paribas. He's joining us now. Thanks very much for joining us, Abhiram. Good having you with us here. So, 30 points higher on the index and 100 points away from new highs on the Nifty. I know it's a statistic, but I guess we are compelled to look at the number and finally put that behind us. But the question really is, what after that? It's a strange situation where the rest of the world, most major markets are down, 15, 20, 25%, and we're at new highs. So what happens beyond these new highs? Some time correction sideways till, there is some semblance of catch-up elsewhere, or the run continues?
That's a pretty good observation that you made. There are a couple of scenarios that could play out in let's say, the first quarter of next year. One is that, inflation peaks, and as a result, rates also peak globally. And at that point, I would think that fixed income could be very interesting because that's when it's probably the best time to buy fixed income, actually. Now, at that stage, it's likely that other markets could start to catch up, especially the ones that have lagged quite a bit. The second scenario, and that is the BNP Central scenario, is that the first leg of inflation is quite easy to bring down to, let's say, 4-5% globally, at least in the large economies. But to move there, even lower from there on, actually could be a bit of a challenge. And as a result of that, we think that central banks will have to raise rates through next year, maybe slowly, but still raise. And that would lead to a mild recession, especially in the US and even in Europe. If that is a central scenario, then I would think equities would probably have a 15% downside from here on. So whichever scenario you build, it's really difficult, mathematically at least, to create one where India outperforms from here on. So the other bit, of course, here is that China could also start to open up. We think that that will happen through the first half of next year. And we've had a massive buy India, sell China trade, and that could reverse. So in short, I would say risks are actually climbing for a continued outperformance for India. There is no doubt fundamentals are very strong, but almost all institutional investors we speak to are concerned about valuations.
All right. Hi, Abhiram. Good to speak to you. Well, we are a slave for earnings, right, ultimately. And India was offering the best earnings growth projections for the next couple of years. It's a mid-teens growth. Do you see a risk to earnings? Do you expect them to get pulled back? Because the globe is going to go into a bit of a recessionary phase. What kind of impact could it have? And also, we are asking guests about all-time highs. I just want to ask you if there are risks and there's a shift from the India trade to China, or valuation-wise, we're not very expensive, or we're not very cheap. 2023, do you see some downside to the Indian markets?
Well, actually, our house call is for 2023 to see new lows for equities. So we're actually in the bearish camp.
Yeah, Abhiram, how low can we go on the Indian markets? This is an interesting one.
Like I mentioned to you earlier, we actually see 2023 to be quite a bad year, at least the first half of next year to be quite bad for equities globally. And most of our targets actually show a 15% downside from here on. Now, in terms of earnings, what you mentioned earlier, I mean, we just passed an earnings season, and what we saw was fewer positive surprises than earlier and more negative surprises. So what that means is that we've had earnings cuts of about 4 to 5%. And you've got to contrast that with, say, North Asian markets where earnings cuts this year have been upwards of 15%. So there's no doubt that India is still, the best in terms of growth on a relative basis and also protection for earnings. But like I mentioned to you, next year is all going to be about, further earnings cuts globally because of global slowdown. Now, this year so far, almost all the correction that we've seen in global markets, not India, has been valuation multiple led. And the risk is that that reverses and becomes more towards an earnings led cut from next year. So in short, I mean, I would think that you should hold your horses, and maybe early next year sometime would be a better time where you get better prices to get back into equities.
New lows, that's interesting. I mean, that's a rare voice that we've heard, Abhiram, as far as the equity markets are concerned, and important as well because it balances out the optimism, the cheer that everyone is looking at as we're approaching new highs. I was looking at your views with regards to sectors. Is it because you're looking at weakness for the equities, you're looking at some safety in the IT and healthcare space? Because that's a counter consensus view.
Yeah, I mean, on the one hand, we're talking about a global recession, and then we're saying that we're okay holding on to IT services stocks. But that's also partly because if it is indeed a mild recession that we will have next year, then we think that's probably priced into the current stocks. So, and more so, what we've seen is that IT has become much more staples like in the service that IT services companies offer. I mean, it's very hard to cut down on IT services spending when that is indeed the source of sustainable competitive advantage for almost any corporate today. So therefore, we think that the earnings may turn out to be a lot more resilient there than the market believes. And as a result, we've taken that counter consensus view. But the other sector that we are actually quite positive on is pharmaceuticals. Not only has the sector underperformed year to date, and healthcare as a whole, if you see, looks quite interesting, especially the ones which are not generic pharma, but more specialty pharma, and also hospitals, diagnostics. All of these areas look quite interesting to us. So those are probably our fundamental top sectors to watch out for next year. But I was hearing what you're talking about financials earlier. Banks continue to be a consensus favorite, and we're no different. We like the high CASA large banks and also insurance companies. So I think there's about 3 sectors that I've mentioned.
Absolutely. Sorry, just to go back to that point, this new low call for next year, this is, there's this base case, bull case, bear case. I mean, this is the base case for you? Or is this,
Yeah, when I say remember that the call that I've made was for equities globally, right? So most of our targets, like I mentioned to you earlier, suggest 15 to, I think the last time I checked, maybe about 17-18% downside, both in the US and Europe.
So this will be for something like the MSCI World Index or something. I mean, if you want to kind of
yeah.
Okay.
So for the S&P, for Europe, and again, and if you want, if you'd like to think that India may not be the one country that will go up next year, right? If the call is that global equities will correct, so maybe some outperformance may happen, but it's really hard to see one country go up and the rest of them fall significantly for 2 years in a row. It's not normal.
1 year is strange enough. I mean, who knows, Abhiram? Stranger things have happened in markets, but we'll see. But on that call of a global recession, is the global house view that is going to be a sharp, swift one, not very long lasting? Is that the broad view, or like a prolonged one, 6-8 months through the bulk of 2023?
Yeah, actually, if it was a sharp one, it's not so bad from an equities perspective, because it gets priced in very quickly, and you get a weakness in the market that gets bought out. But what we think, unfortunately, is that you will have a one leg down of inflation, and that will kind of encourage the market and central banks, but then it'll stay sticky at those levels. And that is the biggest kind of fear that, and that's a worst case scenario really for equities, because that means that not only do you have mild growth or mild recession, but you also have higher rates and sticky inflation. It's not the situation you want to be in.
All right, Abhiram, you've woken us up actually with regard to, making us a little bit cautious. Everyone's dancing away that, all-time highs, 20,000, etc. And, you have good rationale for it as well. But just wanted to ask you a level, the 15% correction, would that mean we could possibly get back to say around the 15,500 to 16,000 on the Nifty? Is that a possibility that you all are working with?
Well, actually, remember that the index targets that we laid out were for global equities. We haven't yet come out with one on Sensex or Nifty, so I just don't want to jump the gun here. But like I mentioned to you earlier, it's not normal to have one market go up and everywhere else you have a correction.
All right, just wanted to clear the air on that. So the global markets could be in for a bit of a rough ride in 2023, going by the looks of it. And then obviously, you can't stand out in such a fashion. But it's been good speaking to you, Abhiram. Thanks so much for throwing some caution and also giving us, your stance on various sectors, particularly the IT space. Well, when we were having the chat with Abhiram, the markets have taken off. We have moved to the high point of the day now, and it's looking pretty good. We're up 45 points. It looks like, yet again, the bulls want to get into this weekend on a high. And we've seen a lot of stocks moving up. IT is the space to be in. IT and Reliance Industries, both those, two sectors. Reliance is a sector by itself because it's more than 10% weightage on the index. And both of them flying away as we speak. Slip into a short break, but on the other side, Nimish is waiting by, and he'll tell us what's going on in dealing rooms, in D-Street chatter. Our technical experts as well will be back with us to give.
Well, the market seems to be taking off as we speak, 40 points higher on the Nifty. And despite the Nifty bank, being a bit of an underperformer, it's moved off the lows, currently sitting with a cut of just about 80 odd points. So maybe one swoop and it goes into the green. The other two legs which are doing well for the market, the IT index, which has actually moved to the high point of trade, and that's led higher by Infosys. And the other one is Reliance, a big mover on the market, on the Nifty today. Big weight as well has moved to the high point of trade. So good time to get in our favorite D-Street chatter with Nimesh. Nimesh joins us. Nimesh, what are people talking about in the dealing rooms?
Hi, Mangalam. So, there is momentum now, right? With the bulls, we are above the technical support levels as well. So that's important. So kind of a breakout for us for the Indian markets, and it's backed by institutional activity as well. The good part about today's market is that there is a broader participation. So the mid-cap index is up 1%, and looks like now there is a bit of a catch-up happening in the broader indices as well. So that's a good sign, because that's where the retail money normally chases. So that's something which is positive. Again, in terms of flows, there is selective buying, and that's largely in the financials. So within financials, it's not only the private banks, but even the PSU banks are well bid, is what I understand from the flows as well. So that leg is really supporting the market very nicely. The other theme for the market today is the PSU sector. Not only the PSU banks, but the entire PSU sector is buzzing in trade today. Look at BHL, that's up. PFC, RSC, so entire space is doing good. and that's where a bit of momentum seems to be. As I said, technically we are inching towards the all-time high, so that will be another big level to watch out for a further breakout. But it looks like the momentum is clearly with the bulls in the first of the December series, and that's backed by some institutional activity as well.
Well, it is backed by, it looks like it, because, we're just less than 100 points away from all-time highs. Individual stocks, that's where all the action is.
So, in terms of individual names, the first stock is BHEL. I spoke about the entire PSU space doing good, and BHEL stands out today. Big volumes and big surge in that stock as well. And at these levels, the feedback is that maybe some large FIIs and some domestic mutual funds are actively buying into the stock, and hence a big move in that stock today. So that's the first one. The second stock is Venus Pipes. Again, this year's listing done very well since the listing and all. Now that the lockup has opened up for Venus Pipes, there is a buzz of a large block deal coming in very soon in Venus Pipes. So that's something to watch out in days to come. The third stock is Nykaa. Well, the stock has been in the news of late, and there has been some blocks as well. Has been seeing some bit of momentum back. Some large funds have bought, but now what I understand from sources, there is a strong buzz of another senior executive leaving the company soon. So that is something to watch out for as far as Nykaa is concerned. And the last stock is Biocon. I picked this up because after a long time, I'm seeing some bit of buying traction back in this particular stock. Some leading FI seems to be a buyer, and hence that stock is up to 1% in today's trade.
A lot for that, Nimesh. By the way, just pull up a couple of stocks that are flying away. You have Eveready, out of nowhere, that rank underperformer. Suddenly, it's it's moved up for this week. It's up 15%, and that's one of the stocks that have seen a big volume spike out there. So keep an eye out on Eveready. The stock is really moving well, and RVNL yet again, another day, another up move. The stock spikes up, in the last few minutes or so. And TD Power, we had a chat with the management yesterday. They were sounding optimistic that from now on, we'll see a recovery in, the revenues. We'll see growth from here on, and they'll hit peak revenue numbers in the next couple of years. That's by 2025. So all these stocks moving well from the broader market. Just thought we'll highlight it because otherwise, the broader markets have been underperforming. Mitesh Thakkar is back with us, though. Mitesh, it looks like it's going to be a good close. 18,500 we're holding out there. A word on the index as well as a couple of stocks?
Yeah, I think it's better than what the market was doing for the entire day. And it's not a bad thing, You had a very strong move yesterday. Today, it was more of consolidation during the day, and the end is slightly stronger. I think I would still believe that we should possibly tomorrow, if not, then in the next 2-3 days, hit that 18,604, which is the all-time high, and even start to cross it. So stay positive, stay long on this, stay on the long side. The calls that I have right now, I have BTST on PVR. Take a stop at about levels of 1850 here. Look for targets of around 1895, 1900. And the other one which I like is Motherson Sumi Systems. That's after a few days of consolidation is inching up. That's a BTST with a stop just below levels of 72.5, and a 75 can be a good target for tomorrow.
Okay, just a few other names in the broader market. There's just 11 minutes to go for close, but look at BHEL, which is up 10%. Stocks at 83. Indiabulls Housing has been buzzing, since the last couple of hours. 12% on Indiabulls Housing. RVNL is up another 10%, so that continues to rally. 74 on RVNL. RBL Bank is up 6%. It started higher. Policy Bazaar, of course, has been holding with those 6% gains. GSPL is up about 7.5%. L&T Finance is up 5.5%. UTI AMC is one of those stocks we don't talk about that often. 8%, although it's been buzzing since the morning. South Indian Bank is a recent addition, 9% higher. Religare, 9%, 185 on Religare. That's a large move coming through. Kajaria is up about 6%, so it's a pretty good screen if you look at broader markets. Some 1,400 stocks are higher, 800 stocks are lower in terms of the breadth at this point. Suresh Ganpati, someone who we spoke with, he covers banking at Macquarie Capital Securities. He's written a note on how Jio Financial Services perhaps will pose a threat to entities like Bajaj Finance and Paytm. We spoke with him about those and a little bit about the insurance space as well. Listen.
GFS with the kind of people that they have on board already, and the kind of capital and wherewithal that the entire group, in fact, Reliance Industries has in terms of execution, they can be a formidable force to reckon with over the course of next, say, 5 to 10 years. The biggest advantage that JFS has is the enormous amounts of data, the reach in terms of the customers, the reach in terms of the distribution outlets that they have got. And on top of that, they've got the capital and the ability, obviously, to eventually lend and make money out of it, assuming, of course, they go about hiring the right kind of people. So clearly, that can be pretty disruptive to the NBFC as well as to the fintech ecosystem. So the segment, of course, where they have, of course, positively surprised this is on the financial services front, whereby the growth in the distribution business that they have been seeing month after month, of course, is pretty strong. So to that extent, there is a positive surprise there, and there has been a little relative amount of cost consciousness also from them. But as I said, we still need to see accounting profits, and therefore there the visibility is still pretty low. So we'll see how things evolve there, and of course we also have to see how the competitive landscape as well as the regulatory landscape evolves. Net-net, I read the current regulator being very progressive, very forthcoming. They've also, obviously, as you know, liberalized the open architecture on the bank assurance space. You can now have 9 partners each, right? So all that, obviously, are steps in the right direction, which will only increase the profitability of the industry over the longer term. I think Bima Sugam as an entity, as a concept alone, is a fantastic concept. Now, it all really depends upon how the ecosystem develops. You're talking about the entire value chain being taken through the Bima Sugam, right from origination and settlement of claims and processing, everything you can do through that portal. So we'll have to see how it shapes up over the course of next 3-4 years. Who knows? I mean, Prashant, this could be the UPI moment for the insurance sector. I mean, it can only expand the market. What this actually does is a lot of intermediaries in the system. I don't want to take out any specific names here, but then they could be definitely, their business models could be at risk, right?
All right, so that is a whole host of stock views coming in from Suresh Ganpati as well. In fact, he spoke on Paytm. Paytm has positively surprised the financial services segment, is what he said. Despite it, lacking any sort of visibility on profitability, there was a note on the stock this morning, a bold call coming in from Citi, and as a result of which, it's continued to surge. Actually, it's moved to the high point of trade with a gain of almost 6.5% on that counter. But let's also welcome Neeraj Diwan, who is the director at Quantum Securities, joining in. Neeraj, we're holding well for the market, and the broader markets are doing much better. Do you think this is, moving towards the home run and we hit a fresh record high, which everyone's talking about, and then move lower? Because we did get opinion today, just minutes ago, that the first half of next year does not look too happy for global markets.
Yeah, good afternoon. Yeah, I think we are almost there at the all-time highs. I don't think that will be that kind of a challenge. It may come today or Monday. But, all said and done, I think the broader markets which have started participating now, we've seen a good participation from the underperforming sector, the underperforming stock. HDFC Bank were not performing earlier. They have contributed a lot to this last kind of a run which you've seen. IT has contributed a lot. So, whether we have to question whether, this will last or not. But I think looking at where HDFC Bank is and where IT stocks are, I think there's still more steam left as far as these sectors are concerned, these stocks are concerned. And even if you touch a all-time high, the broader market still there are opportunities, there are stocks which are fundamentally still looking okay to invest in. Like today you saw a good move in some of the NBFC stocks which were not performing earlier. I think there was some valuation gap which is getting filled in there. PSUs have already done their bit. So now, I think now it's more like a FOMO trade where people are looking at smaller PSU banks also and investing, wherever they think that there's some, upside potential. So that looks like a trade where PSU banks may consolidate at these levels and there may be some profit taking. But I think more or less, I don't think that one should start worrying as far as, the market corrections are concerned. You stay focused on value, stay focused on valuation. If you invest in the right stock and at the right price, I don't think you need to really start worrying and start booking profits left, right, and center. Though some profit taking at these levels, is always helpful.
Okay, all right. Neeraj, request you to hold on. For the time being, we'll slip into a short break. On the other side, we'll come for the final few minutes of market close.
झाके रे झाके झरोखे से झाके हैरत से आंखें अपनी सी दुनिया नई रंगी लागे ख्यालों की खिड़की से मन कूदे भागे झाके रे झाके झरोखे से झाके दंग है छोटे बड़े सारे झाके रे झाके हर कोई ताके तरक्की को टुक टुक हर कोई ताके झाके रे झाके
Reimagineering brighter futures with smarter steels. ArcelorMittal Nippon Steel India. Smarter steels, brighter futures.
सीमेंट स्कूल तक कैसे पहुंचेगा? योद्धा है ना?
टाटा योद्धा 2.0 जहां जमीन है वहां रास्ते हैं।
Will snow days be a thing of the past? Or are we smarter than that?
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You know what we'll do is we'll start wrapping up things because there's just 2 minutes to go, under 2 minutes to go for close. 18,500 is where we'll kind of, make our stand at Friday close today at the end of this week. Let me quickly outline the winners in the large caps, and then we'll look at the broader markets. So on the Nifty, of course, no large moves in the last 31 hour of trade, but gains in HDFC Life, which is the top gainer, by the way. Tata Motors with 2.5%, Hero MotoCorp and Reliance, which is up 1%. Actually, you had just 5 names with gains of more than 1%. Today. Losses also very limited, so very quiet day. Nestle is the only stock with losses more than 1%. Then there is ICICI, Kotak, etc., which are down about 0.8, 0.9%. Broader markets were positive. Breadth was positive, Nigel.
Well, that's right. After a while, you had the broader markets that did much better in comparison to what the headline index did. And that would be a bit of a relief, actually, for portfolios. You had a few of these stocks, GSPL, RVNL, PB Fintech, Eveready, Bikaji, what a week it had, in fact. The stock was up more than 20%. A couple of other big winners this week included the likes of Genius Spa. So that one, in fact, was up more than 10% for the week itself. You had IRFC, continues to run along, was up 16% for the week itself. So some big winners out there from the broader markets. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. Smart Money comes up next on the other side.